Well, it looks like the powerful elite are starting to speak up. Of course, in this instance, I am referring to Ken Griffin. If you don't know who Ken Griffin is, you should check him out. He was one of, if not the leading donor to the Republican Party in the last election. So I would argue that his voice matters when you speak truth to power and you talk about the ugly things or the ugly realities. I think it is time to pay attention. Ken Griffin is now warning that Trump is tarnishing the brand of the United States on the world stage. Again, this is something that we brought up on this channel about 3 weeks ago when we saw that day. I think it was a Thursday where the dollar weakened and the 30-year note hit 4 or 5%, whatever that was. This was a sign that entities outside the United States were reallocating capital away from the U.S. And again, this is not about the U.S. dollar going to zero or losing the world currency. That's headlines, that's clickbait. But what is actually occurring is investors from around the world are simply saying, I'm going to change my allocation. Perhaps I was over-rotated to the U.S., and now I'm going to change. For example, the ECB, the European Central Bank, said, and I quote, dollar asset allocation has gone from overweight to more neutral. Folks, this is exactly what I told you was coming. This is a big deal. This is not being understood about how big a deal this is. Again, as the economy, as the place where it has the most investable assets, if you are suddenly interacting in a world where there are 10% less buyers, that's not a very good supply and demand equation. And that's how you can get 10-year going down in price, up in yield. And it could get a lot worse. What is going on the world stage is certainly changing the opinion of friend and foe. And I believe the U.S. brand is being questioned, is being tarnished. Again, not that it can't be polished up and look good again. But again, we don't operate in ifs and ands and buts. Right now, there is no question that other countries, friend and foe, are choosing to buy and invest and reallocate capital away from U.S. assets to other entities. It's a fact. Now, you can argue that fact is good or bad, but it's still a fact. I would argue that seeing the treasuries go up and the dollar weakening, that's third world country stuff. When your rates go up and your currency weakens, that's third world. We've talked about this now for 2 or 3 weeks. So again, it is good to see Ken Griffin kind of bring this to bear. You can go ahead and watch the video. I saw a 4-minute review of it on X or Twitter. It's out there, very easy to find. On top of that, we are starting to get more facts about earnings. And as expected, they go from bad to ugly. Just in the last 24 hours, this is what I've taken from, well, let me think, 1, 2, 3, 4, 5, 6, about 7 or 8 different earnings call. I've pieced together some information for you. Chipotle, let's start with a pandemic darling. Chipotle is seeing a slowdown in customer spending, lowers guidance. IBM is seeing strong demand for generative AI. Alaska Airlines warns of slower demand and lowers expectations. Southwest Airlines cutting flights and pulling guidance, citing macroeconomic uncertainty. ServiceNow reported a solid quarter, beat top line, beat bottom line. Las Vegas Sands missed on revenue, beat on earnings. I do think it's interesting that I saw an interview with Danielle DiMartino Booth, which is someone I follow. Not always someone I agree with, but somebody I respect. She actually said something that I've tried to help you understand for a year now. That is, you can't fake revenue. Again, I was a general ledger accountant. I sat in boardrooms of Fortune 500 companies at the end of quarters, and we made allocations, adjustments, journal entries to impact earnings. We can't affect revenue, but we can, on a quarterly, perhaps multi-quarters, adjust expenses to impact earnings. So again, to Danielle's credit, she's saying, hey, companies are missing revenue more and more, but yeah, they're looking good because they're beating earnings. They can't fake revenue. So watch that. Continuing on this front, we've got more earnings. We've got American Airlines withdraws 2025 forecast on murky economic outlook. How about Robert Half? Robert Half may be a company you do not know much about. They are a big deal in the Silicon Valley. They are basically a temp staffing organization. It is an organization that historically staffed white-collar jobs. Let me highlight that again, white-collar jobs. Robert Half, just this morning, warns of labor market for white-collar is deteriorating. Is it the economy? Is it AI? Is it something else? Problem. Procter & Gamble CEO, price hikes likely coming as Tide owner cuts outlook on tariff uncertainty. Again, you got to remember, Procter & Gamble's not discretionary, right? We need that stuff. I'm hoping we all keep washing our clothes. But again, what will happen? People will trade down. They will go to the store brands. They will do other things. Couple more. PepsiCo cuts earnings forecast as it predicts uncertainty in tariff spending. Folks, if consumers are not buying Tide from Procter & Gamble or Pepsi from PepsiCo or Frito-Lay or whatever, as I've been warning for a month now, consumers are sitting on their wallets. They are not spending on discretionary items. Hold that thought because we have some counterfactuals in a minute on durable goods. But of course, we've been talking about that, so you knew what was coming. One more talking about Merck. Merck lowers profit outlook because they expect, get this, folks, $200 million impact from tariffs once they come for pharmaceuticals. So again, it is becoming clear that more and more companies are withdrawing guidance, cutting guidance. I wonder when analysts start to lower expectations for S&P 500. When do we take a multiple from 20 to 16? There's a lot of risk when I look at these earnings reports as they roll through. We get a lot more next week. Again, it's been very much financial oriented thus far. We're starting to see other companies. Let's talk about some Fed speak. It's always fun to see what the Fed is saying. We've got Fed President Hammack out talking. He said a couple of things that I noted. Good time for monetary policy to take its time, i.e. no May rate cut. Again, I don't know what the odds are. I did not check this morning, but the chances of a May rate cut need to be nearly zero at this time. There's an incredibly high bar for the Fed to step in. Again, the Fed is not going to bail out the stock market. Don't get it twisted. Here's one that hopefully maybe is a ray of sunshine or silver lining for folks out there if you really are looking for one. Fed could move in June if data is clear about the economy. So again, folks, I would ask you to be careful what you wish for. According to Fed President Hammack, the economy would have to deteriorate in a meaningful way. But you know what? If you want a rate cut, that could be possible in June. Not something I would wish for, but hey, you do you. Trump has made some more exceptions to tariffs. Apparently, he's issued several exceptions to car makers, parts makers from the U.S. tariffs. I guess a lot of the car makers and suppliers went to the White House earlier in the week, and bingo, bango, you got some exemptions. 46% of Americans are planning a summer vacation. If you're one of them, let me know where you're going. Put in the comments below. I would love to hear where you are going. I think Olivia and I might do a trip to Hawaii and a trip to Alaska. There's kind of a fun little twist. We may actually be doing two things this summer. We shall see. But the 46% is actually down noticeably from last year when it was 53% of us were planning a vacation. So again, a lot more people sitting on their wallets. We did get the weekly unemployment report. It came in at 222. Was expected to be 220. Last was 216. We did get durable goods. This is a big one, folks. Durable goods. Last month was 0.9. Expectations were for 1.6. Again, growth came in at a whopping, big whopping number of 9.2. That is a huge move to the upside. It is something that you and I should be expecting, right? You and I talked about all the people buying automobiles. In fact, if you do X transportation, the durable goods order is not very good. We also got existing home sales, but it came out exactly at 7 o'clock. And of course, I started this stream at 7 o'clock. So give me a second. I'm going to look up existing home sales on X or Twitter just to get the number. I'll dig in the details. We'll report on them later. Let's see. Existing home sales. March came in at 4.02, down from 4.27. The expectations were for 4.13. So again, we did 4.27 the previous month. It's expected to go down to 4.13. And bingo, we only did 4.02. This is really leading to my call that we are going to do sub 4 million in 2025. Looks like Josh has highlighted. Let's show some love to One Rental at a Time, folks. I'm going to go ahead and put this on the screen. Josh is giving a super chat congratulating PTO for Life for their article in the Business Insider. Folks, we had the Business Insider writer at the ORAT event in February. They wanted to speak with the wonderful couple going by PTO for Life, and they were, I guess their article just came out. So, Josh, thank you for the heads up. All love to PTO for Life. It's a great story, and I'm very proud of them for getting their own Business Insider article. Folks, if you don't know PTO for Life, you're missing out. Follow them on IG. Jeff and Seleka are amazing. I believe I posted their video on YouTube already of their speech. They are a wild and fun couple. Basically, they've taken house hacking to the next level. I believe they're on house hack number 8, and they are financially free. They've made lots of sacrifices and struggles and all of that, but the long story short is sacrifice once again wins, and they are enjoying their life. They deserve all of the love and respect that they get. So, Josh, thank you for doing that, brother. I appreciate you. Oops, let me close that so we can keep going. There we go. Let's talk. Where were we? We did that. Yeah, we talked about existing home sales, 4.02. Let's see if we had anything on price. Let's see if anybody's talking price. Oh, here we go. Month on month down. Oh, look at that. Median price doomers, crash bros. Gosh, you guys are so annoying. Medium sales price up 403,700. Again, up 2.7%. Again, people are calling for 5%, 9%, 20%. Some idiots calling for 50% crash in a year. Okay, whatever. So let's keep the party going. What else do we got? Oh, let's talk about the Fed Beige Book. The Fed Beige Book came out yesterday at 2 o'clock, kind of an odd report. They usually come out in the mornings. Economic data usually comes out at the morning. The Beige Book always comes out in the afternoon. What I thought was interesting is the word uncertainty found itself 80 times, 80 times in the Fed Beige Book, which means, again, not good. An uncertain consumer, an uncertain business owner, an uncertain investor sits on their hands. They do nothing. That leads to a recession. That's just how this party works. Tourism is down. This is something we are going to have to watch. Canada, Europe, Asia, tourism is down. That's a lot of dollars not sloshing around in the U.S. economy. Government spending is being felt in airlines and hotels. Good, frankly. No mention of a recession. Across the Beige Book, There was no mention of a recession. And then finally, tariff-induced price hikes are feared. So again, lots of stuff. This is really coming to a head this summer. Obviously, we had a very big bump at the end of Q1, i.e. durable goods, right, being up 9%. Lots of people bought cars. I told you of friends that were doing that. That's going to artificially make Q1 look okay. Q2, April is going to also look okay as people got ahead of the tariffs. But we are very quickly heading into an uncertain and slower economy, likely with job losses and layoffs. If we don't figure out this supply chain, there will be plenty of small businesses who rely on China imports that will simply vanish. And that will be problematic for the U.S. economy. What else do we got? I think that's it. Let's remind you folks that I am going to be going live inside school again this Sunday. I don't think I posted the link, but I will. I'm going to be going live almost every Sunday just for school. Once a month, I will be inviting others to join the party just so we can reach out to more and more of the ORAT family. This week, we will be reaching out to course members who have bought the course, How to Get Started One Rental at a Time. Next month, we might, reach out to the Zubra letter or other things. So again, I care about the ORAT community or One Rental at a Time community on school. So you guys will always be invited. So I will look to speak with you most Sundays out of the year, which should hopefully you like. And let's congratulate one more person for joining school. Shout out Brandon. Brandon is the newest school member. Folks, don't forget, if you do join school, don't be shy. Don't be a wallflower. Introduce yourself. You will see the family that we have grown will wrap their arms around you and just be there for you. Don't forget to get to level 2 or level 3 to unlock all that free education. And of course, we will be going live with the daily financial news again on Sunday at 7:30 a.m. Pacific. And please don't forget to check out One Rental at a Time on Spotify. Spotify, we have over 10.1 million streams, which I honestly did not know until somebody told me. So, folks, take care of yourself. Have fun. One more time, congratulations to PTO for Life for their Business Insider article. I'm going to go look for that right now. Later.